When I first started investing, I was always looking for ways to generate more income so I can boost my portfolio's growth. Regular dividend stocks and ETFs just weren't paying enough to make a meaningful difference. Then I discovered covered call ETFs. At first, they looked like the perfect solution with their high monthly income. But after digging deeper, I realized many of them were quietly eating away at my principal. What if I told you there is a fund paying out over 13% a year in cash and it's grown my principal since day one? QQQI broke that trade-off. No waiting. As always, here's exactly why it's my core income holding. 4 reasons. First, strong NAV. Second, tax efficiency. Third, generous monthly yield. And fourth, serious assets under management. Stick around for full explanation. Let's do a quick definition before we dive in. NAV, or net asset value, is the true per share value of everything the fund owns, minus its liabilities. Think of it as the fund's real underlying worth, separate from whatever price it's trading at on the exchange. When people say a covered call fund erodes, they mean the NAV keeps drifting lower over time. That's the thing to watch, and it's quite important. And it's exactly where QQQI stands out, at least in my experience. The fund's NAV showed some growth, not erosion, because it captures Nasdaq upside. A lot of covered call funds sell calls at 100% of their portfolio. That caps gains hard, and over years the NAV just grinds lower, even while paying high distributions. QQQI does it differently. Instead of writing calls across the whole portfolio, the managers only write calls on a portion of the Nasdaq 100 exposure and ladder them using out-of-the-money contracts. That leaves room for the fund to participate when the Nasdaq rallies. The result? Since its inception in January of 2024, QQQI launched with an NAV of approximately $50. As of July 10, 2026, its NAV was $56, 13% growth since its inception, despite the funds also paying large monthly distributions. Through June 30, 2026, its cumulative NAV total return, including reinvested distributions, was at 60%, with an annualized NAV return since inception, 21%. That doesn't guarantee that NAV keeps growing, especially through a prolonged Nasdaq decline if it happens. But so far, QQQI has delivered both substantial income and positive NAV growth. This is a modest growth and high income fund, not a yield trap that quietly shrinks your principal. Second, tax efficient structure. QQQI uses index options on the Nasdaq 100, which gets special treatment under Section 1256, meaning gains are taxed partly as long-term, partly as short-term, regardless of holding period. On top of that, a meaningful chunk of the monthly distribution is classified as a return of capital, which isn't taxed immediately. It lowers the cost basis instead. So compared to a fund that pays fully qualified or ordinary income distributions, QQQI can leave more of your income in your pocket after taxes, especially if you hold it in a taxable brokerage account. Thirdly, QQQI pays monthly and currently runs a trailing distribution rate in the 13 to 14% range, a real income stream paid consistently. Combine that with the NAV growth from 0.1 and you are getting both the cash flow and the capital appreciation, which is the whole point of using the fund instead of a plain covered call product that just decays. Fourth, serious scale in AUM. In only 2 years, QQQI assets under management currently sit at approximately $13 billion. I understand AUM moves daily with inflows and market performance, so always check newestfunds.com for the live number. That matters for a few practical reasons. It means tight bid-ask spreads and strong daily trading volume. So you're not losing money, just getting in and out of the position. And this isn't just retail money. SEC 13F filings show over 260 institutional investors, including LPL Financial, UBS Group, Royal Bank of Canada, Susquehanna International Group. When wirehouses and advisory platforms like that are allocating client capital into a fund, it's a real signal that the strategy is being vetted and trusted at a professional level. Scale also gives the fund more flexibility in how it manages its options book, which helps it keep executing that laddered call strategy efficiently. NAV growth instead of erosion, a tax-smart structure, a yield most bonds can't even touch, and billions in AUM with real institutional money behind it. That's why QQQI is my main income holding. Comment below about your income investment preferences. See you at the next one.